Hi, I'm Brien Lundin of Gold Newsletter, and I am at the Toronto Metals Investor Forum. I have the great pleasure of talking with John Florek, President CEO of Emperor Metals. Good to see you, John.
too, yeah,
Thanks
yeah.
for joining us today. Emperor is one of our recommended companies, and there's a lot to say about it. You've got so many facets to the company, but the key point for me is that this market, the junior mining share market, is notoriously inefficient. It advances, but not all at the same rate, not all companies. And it typically and often and really always leaves some companies behind for no reason. Typically, it's just an inefficient market. And in a red hot market like we're in right now for an investor, if you put in the work and you go find the companies that are temporarily left behind that are due for re-ratings, it can result in a relatively low risk and relatively very high return in pretty quick order. Emperor has a couple of projects. It has a large and growing resource in one of the best regions in the world, 200 million ounces of gold produced all around you, and a potential near-term production scenario. What doesn't Emperor have that's solving the market? Pivot off of that and tell our audience just what Emperor has.
Yeah, I mean, I guess the key thing is like when you look at gold districts in the world, the southern Abitibi ranks number 2 behind South Africa, and then comes Western Australia, and you got the Eastern Goldfields and stuff. So we're like 200 million ounces have been produced here. And we have 2 projects straddling or adjacent to the plumbing systems.
Mm-hmm.
And one of them, our flagship, is Dukane West. And now it's at 1.46 million ounces, 1.5. We just doubled it with only 17,000 meters of drilling. It has a total of like 120,000 meters of drilling. And the other one is like 227,000 ounces. It's like 30 minutes away. And you know, that is an interesting one because we think we could double it quite quickly and then extend it in the future. And, you know, it has a mining permit in place, right? We have 3.3...
And underground development.
It's an underground development.
Yeah.
Has a mining permit in place, 3.3 kilometers underground development.
Mm-hmm.
And so we want to dewater it, rehab it, and put it into production. So that's near-term cash flow, and then we could become a non-dilutive company. We could fund ourselves.
Yeah.
So that's huge. And with that type of mining rate, we could do about 40,000 ounces per year, like when gold was $1,100 an ounce.
That was nice.
Yeah, it was nice, but it wasn't a lot. But at 5,000,
it's crazy.
It's a lot of profit. So this is exciting.
And talking about the profit, you're in the right area for prospectivity. You can find a lot of gold in the Abitibi, but the infrastructure there, you don't necessarily need to build a mill. I mean, we're talking CapEx that you just have to dig the hole in the ground and that's it, huh?
Yeah, I mean, that's why we actually formed a corporate strategy around moving to this jurisdiction. Because within 40 minutes of both our properties, we have like 6 or 7 different mills. They're all under capacity. And so the vision was when gold was $1,100, $1,800, we were seeing companies start up and they'd have to service this debt and they'd go bankrupt.
Yeah.
And so I was like, well, let's go to here. People want development stories. So that was our focus.
Mm-hmm.
And we want to be in a jurisdiction where we wouldn't have to service debt. So we could use these as basically satellite deposits for supplemental fee to existing infrastructure.
Yeah.
Just made a lot of sense. I'd save $500 million or $1 billion in CapEx cost. And our investors would get a healthy rate of return, a quick payback period, and a healthy, a reasonable NPV for the project.
And I would think with a half a dozen underfed mills around you, it's not just that you'll be able to find a deal, but you'll be able to find a deal with the best terms. Yeah, because it's competition.
Absolutely. I mean, the only risk there is, gold is going a lot higher, so maybe they can start topping up their fields. So maybe we do build a mill because gold at $5,000, $5,000 an ounce changes a lot of dynamics. So we have the optionality to do whatever we want with this type of price. I was happy with gold at $3,000, but now it's $5,000. So the optionality is important. We're going to have multiple scenarios and what it looks like and what our investors want to do. Do we want to toll mill it and use existing infrastructure?
Yeah, yeah.
Or do we want to build our own stuff at this price?
And become the spoke in the hub, or the hub and
Yeah.
with the spokes.
But Dukane West, literally speaking, I mean, it's on that crack. That's our flagship. And between us, First Mining, and Stellar, there's 20 million undeveloped ounces. And Eco Eagle's right in the middle of it with
Right.
the whole all-the-way mine. And they control the jurisdiction. So if you're looking for more feed for your mills, I mean, it's
right there.
Consolidation.
Well, let's talk about each project in turn and explain them to the audience.
Yeah. Okay. Duquesne West is basically our flagship property, and we're building this big open pit above this high-grade underground gold mine. It's conceptual in nature at the moment. It's 1.5 million ounces, really at an average grade of 1.69. That was at $2,300 gold, and that was using lower cutoff grades. But if you use higher cutoff grades, like people with convention these days still use 0.4 cutoff for an open pit. We're looking at an open pit about 1.5 grams per ton.
That's rich.
And so, but our last drill hole in 2024, one of our last ones, we hit in the open pit environment, we hit free gold in one of these bulk tonnage lenses. We know it exists because our recovery, we did benchtop recoveries tests, and we have really 90% recovery on this deposit. More importantly, we started seeing the free gold. And that was huge because he had 21.7 meters of, 35.
Yeah, that was an amazing
gold. Yeah.
Amazing. So let's talk briefly about that. So the project was originally thought of as an underground high-grade project, right?
Correct.
And you had the idea that there's enough low-grade halo mineralization, or is it disseminated, to go make it an open pit and have those high-grade sweeteners?
Absolutely, because when we started our initial drilling in 2023, we were the first company to assay the entire core. And the eureka moment was basically the entire core was containing gold. They only sampled those high-grade lenses and I show that in my presentation of like 10 meters of 7 grams per ton and stuff like that, or 15 meters of 10.8 grams per ton. So that's in all my presentation. You can see because the heart of the deposit is really high grade and has thick lenses. There's like 8 of them. But more importantly, which nobody ever sampled, was the host rock to these high-grade lenses.
Yeah.
And they contain like 25 meters of, 1.69 grams per ton. And most recently, we had a press release on the fringes of the open pit internally that people said there was no gold. We had 107.7 meters or 0.5 grams per ton with the open pit. Perfect.
Yeah, especially at this gold price and in that environment, that area. So you were able, by taking that different approach, by looking at an open pit approach, you were able to, and drilling, double the resource, and using AI early, before anybody else really, you were using AI to really understand the model and predict where it was going.
Yeah, I mean, I won an award in 2024 for innovation using AI. The Dukane West model, our flagship, won an award. Put it in. It came third place. The first one was a hydrogeology and environmental, how to use AI in development stories. And we were third. We're the only mining company in the top 3. Global, it was a global initiative. And I got that experience. I was chief geologist up at Detour Lake Gold. We built the foundational models of how to use AI and use those models and feed a mill in a production setting. We did it successfully. We increased the output by an additional 20% gold. When you're producing 700,000 ounces a year, 20% is a big bump.
Yeah, no shitting.
That was at $1,100 gold. And so all of a sudden, Detour became really, really profitable. And so this is what basically transformed the company, because 6 months later, Kirkland Lake took us out, and then Eco Eagle. They saw the generational mine it would become. So I got all that experience. Every one of these properties that we picked out, the 2, we evaluated using AI prior to picking it up. And we could build these models within a month or 2. So that was the exciting part. We could do a full evaluation that would take maybe a year or 2 from other companies. But with the assistance of AI, it helps us make decisions quicker.
And so using that, you doubled it to about, what's the resource now?
1.46.
1.46. So basically 1.5 million ounces there. You've got growth potential on the potential near-term production that would self-fund you. You've got lower potential CapEx to bring these into production because of hopefully toll milling with all the mills around you. And your market cap is remarkably low. It's one of those cases I tell people over and over again, this is an inefficient market. You can find gems that it just hands out, lying on the ground in front of you if you do the work. And this is one that is, Emperor is due for a big re-rating. The market will not overlook it much longer. This looks like, I think, last chance to get on board. So thank you so much, John, for telling us all about Emperor.
Appreciate it.